Good afternoon. Welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Yatin, Mota. Well, Yatin, what a terrific Tuesday. We have the bulls back. They've brushed aside the fears of a global trade war, and now Sensex is closed with nearly 1400 points gain. And even Nifty surpassed its budget intraday high levels, which was 23,632, and has eventually settled above 23,700. We saw equal participation from Midcap and small caps, and the Bank Nifty index, that was the lead performer. So all in all, Yatin, a good relief rally today, but now that China has retaliated with tariffs on US, we could see some action as Chinese markets open tomorrow after a long New Year holiday.
Absolutely, Lovisha, but let's talk about the global markets. There was a Trump announcement that we would put tariffs on Canada as well as in Mexico. Then he extended those timelines by a month because he had a positive conversation with both the governments neighboring him. Obviously, China tariffs were expected. There is nothing new, which the market did not expect. I think that too probably will settle down. But when it comes to the domestic market, as you importantly pointed out, that the day's high of the budget day was taken off. In fact, the Nifty settled above that 23,750 level, so to say, in closing. When it comes to the advanced decline ratio also, we were almost comfortable at 2:1. Mid caps also seeing some bit of pressure, but overall, I think large caps clearly outperform in trade today with the PSU banks, energy, Reliance Industries and financial services stocks leading. Overall, a great trading session and important levels being breached on the technical side, which might lead to further short covering rally in the markets because of the FI pressure that we are currently facing.
That's right. FIs continue to be net sellers. Let's see if there is any positive sign from today's market. But coming to the top Nifty 50 gainers, definitely Shriram Finance up about more than 5.5%. Second day of gains. We saw some capex themed stocks also back in action. The likes of L&T, which saw 4.5% gain. Bharat Electronics also more than 3.5% gain coming in for BEL. IndusInd Bank, that also performed well, 3% gain coming in for the bank, sixth day of gains, and now it is up about 13% because brokerages do believe that the worst of MFI concerns for the lender is over. Adani Ports up about 3.5% after it delivered highest ever monthly cargo volumes, and Reliance Industries, one of the notable big mover, up about 3% as it plans to bring back Sheen back to India. Now, this has caused a ripple effect on Trent because Trent has slipped about 6% and is topping the top Nifty 50 losers pack. And among the other names that included the top Nifty 50 losers, that includes some of the consumer staples which continue to remain on the back foot. Britannia, Nestle, all of them seeing a cut of about up to 1.5% that is coming in. Hero Motorcorp, another consumption play, seeing a cut of about 1.5%. But Yatin, now take us through some of the top performers and underperformers from the mid-cap and small-cap space.
Yeah. So, if you look at the FNO gainers, we had Kalyan Jewellers making a comeback, 12% up for that stock, good bounce back. Good bounce back in capital goods stocks, the likes of Siemens, ABB, NCC, HAL, all of these stocks doing well after CLSA in its reports, pointed out that the capex growth is nearly 19% if you compare it along with the state governments, and the kind of execution that we will expect in the next 3 months. What was not doing well in the FNO space, obviously you spoke about Trend, but Bata India, Tata Chemicals after the results were down 3%, AB Capital down 3%, United Breweries also witnessing some bit of profit taking. But look at stocks like UPL, SRF, from the chemical space hitting fresh 52-week highs, stock at multi-month momentum. Bajaj Finance and M&M also from the frontline stocks hit fresh 52-week highs, clearly indicating that the momentum is still quite on when it comes to these domestic fund favorite stocks.
That's right. Well, you were mentioning about the chemical space being back in action. Well, let's talk about the first stock in focus, that is your Tata Chemicals. Well, the stock did not react well to its Q3 numbers and it slipped about as much as 5% to hit a 52-week low of 899 rupees per share. Now, the drop, of course, it did come in due to the weak set of Q3 results. We saw that the company swung back to a loss of 53 crore rupees from a profit of 158 crore a year back. Even revenue dropped by 4% 4% year on year, and the operating performance was equally hit due to higher fuel and freight costs that we saw during the quarter. Now, the brokerages have largely remained cautious on the counter, primarily due to two reasons. The rising soda ash prices, that even the management has said that they will continue to see another 3 to 6 months for it to stabilize. Now, this means that we could see another weak quarter in the upcoming March quarter. And the second reason why the earnings took hit was because of its closure of UK plant, which basically accounts for about 8% of the company's total revenue in FY24. So Motilal Oswal has downgraded the stock to neutral and has slashed the target price to 1,030 rupees, while Kotak has also maintained a sell view on the counter and has sharply cut its EPS estimates for FY25. So Yatin, even though the management does expect soda ash prices to stabilize in the second half, but it could be a long road for a recovery for Tata Chemicals.
Absolutely, the recovery will be long, but a potential tariff on Chinese exports, the kind of steps China also takes counter to US would probably benefit Indian chemical companies. We need to see as to how really does it help. As of now, it seems that the base chemical prices, the soda ash prices are slightly muted because the glass demand in EU as well as the overall demand for soda ash and the key products that Tata Chemical manufacturers are slightly below par. So we will watch for the EU demand and the US demand to really recover before we can talk about recovery when it comes to Tata Chemicals products.
Okay, all right. Well, another stock did grab the limelight, like we were mentioning about the capex theme stocks that were back in action, and that included L&T. Well, the stock did snap its 2-day losing streak and finally gained up to 5% in today's trade after its minerals and metals business secured an order to set up a pellet plant and a DRI plant in the Middle East and the North Africa. So now the scope of work includes design, build, pellet and DRI plants, which includes engineering, supply, erection and construction works. But the company even reported a good set of Q3 numbers, and the management said that they are bracing for a good March quarter as well due to strong order book and marginal slowdown in execution. Yet then the stock did brush aside the negative news of a lukewarm capex today. And now that the management is also guided to surpass its revenue guidance in FY25, the stock could see some bright days going ahead. Absolutely,
and I think a lot of orders that they have recently won from the MENA region, which is basically the Middle East, especially Saudi Arabia, the execution is expected to pick up. The management remains confident that they will be meeting their order inflow guidance, as well as margins would see an uptick as execution picks up. I think L&T is one of those rare gems which sees a good bounce back when the market roars. And exactly that is what has happened today in a market wherein we saw good moves. It saw fresh buying and short covering both coming in with a 5% move. And as CLSA was also pointing out, the capex as put in the budget looks much better than what the market was expecting, and hence a good bounce back in most of the capital goods stroke engineering names. Also, talking about PSU stocks, one stock which is on my radar is ONGC. Valuation wise, a lot of brokerages do like the stock of ONGC, with crude hovering around $75 per barrel, or in that $75-80 barrel range. Companies like ONGC would benefit because the stable crude regime also ensures that you have volume growth. In fact, ONGC is also trying to ramp up the crude oil production. And according to brokerages, the kind of ramp up that we could see for production in crude oil, that will benefit the earnings overall. In fact, today CLSA has come out with a high conviction buy note, outperforming in terms of the sector outlook. Target for ONGC by CLSA has been put at 360 per share. They believe that the growth guidance for new field production is something they are excited about. In fact, the gas output also should see some improvement. And over the years, ONGC has done a lot in digging wells and trying to explore new oil and gas. Probably those efforts will start paying off now. However, if you look at the Q3 EBITDA, they came in much above the street expectations, helped by beat in oil and gas sales volumes. So sales volumes continue to surprise the street, and the valuation also remains good for companies like ONGC. Today the stock ended up almost 2% higher in trade.
That's right. Moving on to the next stock in focus, that is your power grid. The stock did fell 4% today after the company reported a weak set of numbers, but towards the end we saw a bit of recovery and 0.5% gain come in for power grid. But from the Q3 perspective, profit dropped about 4% year on year, and revenue also slipped by about 3% year on year, and even the operating profit and margins also saw a setback. Despite this, ICICI Securities have come out with a note and said that the company would benefit from the long-term horizon of transmission opportunities which emerge, and strong capacity additions would augur well for the company too. Therefore, ICICI Securities have recommended to use any of this correction to add into a power grid. Yatin, budget allocation to the power sector was up by 30%. So, do you expect the stock to benefit as well going ahead?
So, clearly the kind of power capacity decision, especially, the government focus on nuclear power generation, that will also help the overall power sector. When it comes to, power grid, obviously, be it nuclear power, be it solar power, be it thermal power, the power needs to get carried from the grid to the end consumer, and power grid exactly does that, provides the grid infrastructure to the country. And with power capacity addition being quite aggressive till 2030, both for renewable, nuclear as well as for thermal, I think companies like Power Grid would continue to benefit, given the fact that they have long capex plans as well as new ordering which is happening in from government agencies.
That's right. But with that, we've come to an end of this edition of the Closing Bell. Plenty of things lined up tomorrow. Q3 results. We have Swiggy earnings coming out tomorrow, so do watch out for that. And of course, what is happening on the global front, what the US president could do next, and Chinese markets are also opening tomorrow. We'll watch out for that. And of course, the voting for Delhi Assembly elections will also be tomorrow. But until then, signing off, Yatin and me, thank you so much for watching.